Hi, class. It's September 14th, 2020. I just want to give you a brief market update of what's going on today to kind of still help the class feel timely. So U.S. markets were broadly higher today. Every sector was effectively in the green, which means up in value. The sectors that led today were REITs, which is real estate stocks, technology, and materials, which is kind of an odd mix. Usually it's growth or value. But what really led the way today was small cap stocks. We've seen a huge rally in large cap stocks over the last few months, especially post pandemic. And small cap stocks had a huge rally today relative to large cap stocks. While the FANG names, Facebook, Amazon, Apple, Netflix, Google, they were broadly underperformed the overall market today compared to the average stock. When I say underperformed, that means it just did less well than the average stock. Next, the dollar showed a little bit more weakness today. Why was the dollar weak today? The dollar was weak today because the U.S. is being perceived to be handling the coronavirus less well than other countries, and therefore we need more stimulus, which will also drive the value of our dollar down. This is also reinforced today by seeing gold up almost another 1%. Individual company news. There's a whole host of drug companies working on a coronavirus vaccine. For me, in my opinion, it's hard to pick a winner in that area because it's kind of a binary event. Someone's going to win, they're going to be the dominant force. And also with the coronavirus vaccine and some of this testing stuff, at some point it does go away, right? What else is going on in the market today? Some analysts also reported today out of Goldman Sachs and Deutsche Bank think the worst of the sell-off might be over. For me, I'm really cautious about the next 6 to 12 months. I'm not predicting a correction tomorrow, but I am cautious about the level of valuation. When the stock market valuations tend to get pretty high as they are right now, what will happen is only a little bad news will be needed to bring the market down to earth. The other thing I wanted to share with you guys today for a few minutes is just how I keep track of some investments. We talk about a lot of this stuff in theory, but how do I do this in real life? So right here is a spreadsheet where I keep track of an idea list effectively, and I can sort this idea list to give you a better idea. Let's say I want to look at what stocks might have risen significantly in the past 2 months. So I'm just going to sort by the 50-day moving average, which means how far below a stock is for its last 50-day average price. And that's, if you can see it, that's in column U. And hopefully the spreadsheet didn't freeze because if it froze, there we go. And we see here in this column, right, the 50-day moving average, which stocks have had a downdraft compared to their historical 50-day price. I want to look for stocks that might be oversold, right? So I can go through this list and see what might be attractive. As I scroll down, it's going to show me the stocks that have shot up the most on my watch list. Penn Gaming up the most in the last 50 days on my watch list. It's trading at, and I know what this is, 72x. It's trading, that means it's trading at, that's a growth rate of 72, right? So expected to have fast growth. It has no price to earnings ratio because of the pandemic. It didn't have any earnings last year. Let's look for one that might be a little bit more attractive in terms of metrics, something a little bit more reasonable. And I keep a whole host of statistics here: the PE ratio, the growth rate, the PEG ratio. Does it pay a bond? What's the yield? The dividend yield. There's other factors here that I'll talk about later. There's also the beta of the stock, and that's typically how sensitive the stock is to the overall market. One area I like to sort for is the PEG ratio. So some stocks will have a high PE ratio, and we'll cover that in a later chapter, but stocks with a high PE ratio look expensive. And the reason they look expensive is because typically they're expected to have high growth rates. So the PEG ratio, which combines price to earnings with growth, is supposed to right size that measure of growth and make it a more meaningful metric. and normalize a potentially high PE. Well, if a stock is a high PE, but it's expected to grow really fast, then maybe that high PE is actually justified. So, right here, looking at stocks with a low PE a PEG ratio, right? PEG ratio really shouldn't be below 0. So, I'm effectively going to ignore these ones right here. PEG ratio for MarineMax, which is a boat retailer, is at 0.34. Why would there be fast growth expected at a boat retailer? Well, it could be the perfect pandemic vacation opportunity for people who formerly would have wanted to take a cruise in Alaska or go to Europe. Other companies that I can recognize here, weapons manufacturer Northrop Grumman, I have it listed here twice. Outsourced manufacturing by a company called Flextronics or Flex. Health insurance company Anthem. Lowe's, home builders look cheap. Nautilus, the gym equipment company. Jabil, another outsourced manufacturer. Sometimes the stocks that look cheap all also fall into categories. So you'll see a category of stocks that can look inexpensive from time to time. It won't just be a one-off company. Another interesting name here that looks cheap based on the PEG ratio is 1-800-Flowers. Think about that, right? In a pandemic, what stock might have really killed it? Flower delivery. Someone's getting married, having some kind of event, and you can't go, or funeral, right? And you can't attend. What are you going to do? Send flowers. So 1-800-Flowers was in a real position to dominate, which would cause me concern going forward is how long will that trend continue, right? How long will someone choose not to go to an event and send flowers? So that might, law of averages might eventually kick in. But I'd want to do more research on what other things they're doing to maybe keep customer growth or grow it further. So that was a small update for today, guys. September 14th. I'll be posting this for the morning of September 15th, and I'll try to post these twice a week for you guys to keep the class timely and relevant. So hope you all have a great day.